I've added last month, I just started adding the interesting investing fact. And so the fact here today, this was a pretty interesting one. I saw that since 1916, the Dow Jones made all-time highs less than 5% of all days. Okay, so 5%, less than 5% of all trading days of the S&P 500 was at an all-time high. So if you were an investor during that time period, right? Well, congratulations, you're going to be 110 next year. But if you're an investor in that time period, that means that 95% of the time you're under your high watermark. And I've met many investors over time that kind of focus on that high watermark. And so 95% of the time you're actually going to be underwater. Okay. But the return during that time period was 279,000%, right? But if you're looking at it like, oh, I'm at my high water mark, I hit it, and now I'm not at that again. So the point being is the less you look at it, the better off you'll be, right? If those are emotional decisions that cause you to say, I'm not at my high water mark, what am I going to do? That's not the right way to invest. Investors don't have a lot of success with that. It's kind of more timing than time in the market. So again, you know, the less you look at it, probably the better off you'll be. Don't focus on the high water marks at all times. This is a long-term game. You'll reach that high water mark again, most likely in the future at new highs. But yeah, if you're focusing on hitting that high water mark every month or every day, looking at your account, God forbid, that's not the way to not a comfortable investment experience. So, but I thought that was pretty interesting.